Good morning, investors. Welcome back to another TipRanks webinar. My name is Ari Gutman. If this is your first webinar with us, with the TipRanks team, I want to welcome you here and just break down exactly what we're about to go through. So first and foremost, we're going to run through a bit of our economic backdrop, some of the things that are going on, what we could expect this week, moving into the following week, and perhaps on the month here. And then most importantly, is dive into a popular TipRanks tool. The one selected today is actually one of the most popular tools that we have on TipRanks. And no, it is not the Smart Score. So with that, let's get right to it. I want everybody to be well aware of the most recent ADP report. That is really the payroll report for all of us to watch and understand really if our economy is as robust as it has been. And in short, yes, our economy is still booming, very robust. That ADP report let us in on the fact that we added about 184,000 jobs this past March, private jobs this past March. So the expectation was that we were actually going to get 150,000 jobs added. And what we got, of course, was 184. So that shows that we still have a very strong economy. And while that sounds great, I also want to let everybody know that wages actually increased as well to 5.1%, by about 5.1%. So that all came out of the most recent ADP report. Now, as of late, Treasury yields have been rising. And as we've been seeing, stocks have certainly been on the decline. Another tidbit of news that I'm sure is not too new for all of us to digest is just the fact that we're hearing this word bubble being thrown around a whole heck of a lot. So a lot of experts on the street are sharing that we are in some type of bubble. And we've been seeing that as we've been seeing tech just continuously run up. There's a lot of overvalued stocks, and that leaves all of us as investors really looking for, well, which stocks to actually double down on and invest into for the long run. Should there be a bubble? Should there be some type of market correction? The whole name of the game here is don't panic, because we'll have done our due diligence on the stocks that we're investing into. And then most importantly, just understand that, well, if we're invested into quality companies with that Warren Buffett approach, right? So the buy now and really hold on to for the longer term, we won't really need to sweat it all out. So again, my approach as an investor is just so we're all on the same page, not a day trader. And I'm prefacing with that because that's how I'm really able to stay pretty calm and cool and collected, even though a lot of these reports are coming out and showing, well, there might be some, volatility come the next few months ahead of us, whether we're in that bubble, that market correction territory or not, right? Because we have our market mandates, which is something that I always like to keep my eyes on. So yes, we got that ADP report. It showed 184,000 jobs added in March. Economy is booming. That's really exciting news, right? For the consumer on that consumer end. But on that investor end, well, that's presenting us with a little bit of trouble to really digest and understand, well, what's going to happen here? Because a lot of the data that's been coming out lately is actually pointing towards, right, a correction. And when we look at our market mandates, which if you're on here with me or my colleague Julie, we are always talking about, right, the future and what could happen moving into the future. And so looking at where inflation is right now, as of our latest CPI report, the latest inflationary reading, well, it popped up to 3.9%. Now, if we listen into the Federal Reserve, and again, never fight the Fed is the good old saying, but if we listen into what the Fed is saying, right, their goal is 2% inflation. They're steadfast at getting inflation down to 2%. Every time Jerome Powell speaks, that's a reiteration of really what he's saying. And then more so, just understanding that he's not going, or the Federal Reserve rather, is not going to decrease interest rates until they have more data on hand to show that we're actually moving in the direction that they want to move in, which is 2% inflation. So here's kind of where we're at from at least where I sit, which is we're probably going to be in this environment of higher interest rates as well as higher inflation for a bit longer than we all would have anticipated or hoped. Now, this is all really interesting to really be in now, because if we were on this webinar 6 months ago or a year ago, I would assume that we all would have expected that we would have come down in interest rates, that inflation would have come down as well. So it really is, I hate to say it, right? This unprecedented time that we continue to live in. And I can laugh and smile about that because it almost seems like since 2020, we've been living in this unprecedented year, year after year. So what I also want to have everybody take note of is just the fact that, as many, economic reports as we can look into and digest, what's really important, again, is not to be afraid of them, but also to recognize that we can look back into history and kind of see what happens, right? We've been in market correction territories. We've had the corrections. We've had depressions. And year over year, right, as time continues to go on, again, our good friend Warren Buffett will always say, if you believe in the U.S. economy, you believe in the U.S. market, right, we will see through this to the end and continue to innovate, continue to build. So that's kind of the mindset that I always go into investing with, right? Let me not worry so much about today, about next week, about a month from now. Let me focus a little bit more on the 2-year plan, the 5-year plan, the 10-year plan. Okay. And of course, all of us are definitely in a different investment timeline, if you will, or a different investment position based on our ages, our investment capacity, how much we actually have to invest, where we're investing, right? There's a lot of factors that go into this. But the safest approach really is to think about the longer term and not to be afraid when you're making investment decisions. So I always want to share that before just diving into a TipRanks tool, have those macros in front of us, front and center, because the key here as investors is just to be painting an economic picture for yourself. So when you go on to TipRanks, when you select the TipRanks tool to actually use and discover maybe a handful or a plethora of new stock ideas before you invest, have that painted economic picture in front of you. So therefore, when anything happens in the market, you don't panic because it was anticipated to some extent. Although none of us can predict the future, I wish I could. What I will share with you, it's all about finding those quality gems in the market, staying calm, even though there's news headlines right now as we speak that are sharing there's a market correction on the way, there's a bubble, right? Go towards the quality and you're going to continue to swim, right? Even if it's against the current, you're going to continue to have that longevity to swim and make it through to the other side. So with that, where I want to go now with everybody is actually onto TipRanks. And I want to go ahead and share my screen as I jump on there. So bear with me. Now, here we are on TipRanks. I'll minimize this. I'm going to enlarge us here. The tool that I want to dive into is right underneath ideas. And if you go underneath ideas, it is actually this first stock research tool. It's the top Analyst Stocks. You're going to see there, it's already noted that it's a popular tool on TipRanks. So we're going to give that a click. Now, as this list loads, I want to always point everyone's attention over here. If you could follow my cursor, it says in total here, 121 stocks are appearing below us. Now, the tool in and of itself are the stocks that were basically recently rated by top analysts, right, of stocks that are strong buys or on the other end, strong sells. Now, these 121 stocks may not fit into your portfolio, but they may be a good idea. So what I always like to do is, again, take that economic picture that we just painted for ourselves and understanding we just had some hot reports come out. The market's down. Treasury yields are going up. It's certainly spooking the market. It's actually a time for me, if I am really that longer term investor, or even if I'm the day trader, right? Even if I'm maybe, one of my long-term horizon, maybe a year or less. It could be 8 months to, a year if you define long-term investing, in that capacity. I define long-term investing as 5+ years out, 10 years out. But in knowing that, right, I am not just thinking about tomorrow, understanding we're down here on the week in the red, right? Kind of a little volatility experience this week, yesterday in particular. But this could be a great buying opportunity for those of us to go in ahead and buy on the red days. So what do I want to do? I want to come over to the stock rating dropdown, you'll see you got only 2 options there. So we could sort this list of 121 stocks with our 2 options in front of us. If we're looking to go ahead and make some buys today, we're going to go ahead and hit strong buy. From there, we're going to see that our list came down to 114 opportunities now for us. Notice I'm calling them opportunities, not necessarily buys, because they got to be right for my portfolio. Let's get on with it here. We're going to go down to the market cap drop down and again, go back to that economic backdrop. If I myself am anticipating that we may hit some volatility in the coming, I don't know, 5, 6 months out, what's going to happen, over that span of time? I want to make sure I'm playing a little bit safe, but also as that longer term investor, I want to make sure I'm going with companies that, I can, to the best of my ability, know that they're going to be standing at the end of the decade or whatever it may be, right? So I want to go ahead and hit mega and large cap there. You'll see now my list has dwindled down to 31 positions after it was just over 120 positions there that were down here. Now I can scroll down and already start to look at some of these names here. So let's do that now. We got Cooper Company coming up first, Delta Airlines, Microsoft, Dexcom. We keep going down here, just get a couple more. Merck, seeing Taiwan Semi in here, NVIDIA. Okay, these are all now stocks that I'm familiar with a lot of these names, but I actually want to go and do some more due diligence here for myself into one of these companies. So what do I want to do in knowing that I have this generated list of 31 stock opportunities or 31 stock ideas for myself? Well, do that due diligence. I'm just going to go ahead and click on this first stock. Okay, now usually what happens across the board with a lot of investors, right? A lot of us retail investors will jump on, I don't care whether it's TipRanks, Seeking Alpha, investing.com, wherever you're jumping on and grabbing stock ideas, a lot of us tend to get very excited over the analyst page, right? The analyst forecast page, because we see strong buy, we see upside potential, 17% there upside, could all be very exciting. Now, there's some good news and some, I don't know if I want to call it bad news, but some news we got to sort through. The good news is that this stock, as we know from our ideas, stock ideas, right? Top analyst stocks, there's been some recent ratings on this one. So we can scroll down and we could see that, yeah, and surely we have a top analyst here, Joanne. We also have Larry, 5-star analyst here that rather recently rated the stock. Now, Joanne has been the latest, which is why Cooper Company appears on this list to rate the stock. Now, I'm going to hit you all with some other news that we got to unpack. That news is that it doesn't necessarily mean Cooper Company is a buy for our portfolio. Just being real with everybody on here. Okay, so we want to go ahead and dive into the stock analysis page. What I always like to do is first, it's usually on a day, right? But go to year to date and try to just paint an economic picture for myself pegged against the actual stock chart. So I can see that Cooper Company is up, looks like nominally 3.6% on the year. Okay, now what I want to do is I myself, and not knowing Cooper Company, right, I would want to scroll down and come over to company description. At bare minimum, here is where I want to get a better understanding of Cooper Company. Okay, so we got the Cooper Company here operates in a medical device company. It operates through the following business units. Okay, and then we can come down and we can see that the Cooper Vision business unit brings refreshing perspectives on vision care. Okay, the Cooper Surgical business unit focuses on supplying women's health clinicians, okay, with market medical products, okay, and treatment options. So I know I have a healthcare company now that I'm looking at, and I want to come back up, and now I have this nice, what I always like to call our tool, our stock Smart Score stock tool at a glance. Okay, it's a 5, and if you're familiar with TipRanks, any stock that's at an 8, 9, or a 10 is in the green there, as to say that longer term, the stock is more likely based on 8 factors to outperform the market. Right now, we got Cooper Co at a 5. So that's just at a glance. Okay, I want to continue to do that due diligence. Now, the next step I would take is actually heading over to ownership, and I would come down to see if there's been any recent activity in terms of hedge funds or insiders and what they're doing with the stock. Now, I see as of March over here, we have a senior VP who bought and sold there, the same one. Interesting. And I'd come over to hedge fund activity as well, just get a general understanding of what hedge funds have been doing with the company. Okay, so as of the last quarter, we see that there's actually been a decrease in holdings overall there for hedge fund activity. I can come back to my stock analysis page. Here's my biggest question is what would make this stock jump as of March 4th there, literally this week here. And I can come down and now I can get some news maybe in what's going on here. This might be a stock that I'd want to do some more investigations with, more due diligence on, just based on the fact that it looks really exciting. Is it one for my portfolio? Now, another thing that I want to do here is actually click out just to see how it's been performing over the last 3 years. Now, if you've understood the economic environment, right, where a lot of these healthcare companies have been, they actually have not been doing so great. Whether it's your Pfizer's, your Amgens, your Johnson & Johnson's, you can take a look at those ones, okay, and they're also not performing as well. So this one, again, might be an interesting play. Over the last 5 years, 3 years there, up only 1.2, 5 years, 35%, and 10 years there of appreciation, 200%. So again, an interesting play for us to consider. And you'd want to look at this one in terms of, well, if I'm expecting that volatility and I want to play it a little bit safer, now this might be an interesting opportunity for me. Healthcare, as we know, is something that we always need. Again, whether it's your Pfizer's, Amgens, or perhaps here Cooper Co., these would be stocks now that would allow me to get myself in a little bit more of a risk-averse position. But we started off with the analyst, so let's end this one with the analyst. Now, we came here because of that recent analyst rating there with Joanne, but I always like to direct every single TipRanks investor to actually what I feel is the most important analyst rating of them all when it comes to every stock, and it's going to go all the way down here to the bottom. And we have the best analyst covering Cooper. So in 1 month, okay, we have Jeff. 3 months time period, we also got Jeff. And then 1 year and 2 year, okay, we got Joanne. Now let's just make sure that's the same analyst, and it is. Okay, so now we actually have the best analyst covering Cooper Co. here for a 1 year period and 2 year period. So that longer term analyst who's going to give you the best ratings here for this particular company is in fact Joanne. That is a green flag for me. Now, again, would I add it to my portfolio? Well, there's some questions that I would go ahead and now double down on, right? How many healthcare companies are in my portfolio? What type of economic climate do I think we're going to be in? What's my investment timeline? How am I going to invest right now given the current climate? And am I going to sell within 6 months? What's my plan? What's my strategy? There's a lot of questions that will come into play before I just execute a buy. But all in all, I will say this. From our ideas tab, top analyst stocks, and finding Cooper Co. just by hitting strong buy and come into our mega and large, we get Cooper. Now, that analyst is in fact the most recently rated stock here for her has been Cooper Co., which is good news for me. Now, if I click on Joanne and I scroll down, I see that she has a success rating overall of 65%, average return 7.7%, not too shabby. But what I always want to do is go ahead and find, right, Cooper Co. Here we are. So I can see now that when it comes to her success rate for this particular company, she's right 93% of the time that she's rated that stock. So out of 27 times out of the 29, she's been right on this stock rating. Again, in her time period of a year to 2 years out. So this is actually a pretty interesting opportunity, all dependent on everyone's individual investment timelines and portfolios. That's the key. Again, nothing I should throw out here and talk about right now in terms of stock ideas is a buy or a recommendation to buy, but these are how you use our tools or how we want to get everybody using our tools. So let's just run through one more, because that was actually almost a lucky straw that we pulled out, and Joanne was in fact the best analyst that covered that one. So we're going to go over to, again, ideas, hit top analyst stocks. We're going to scroll down. Knowing that economic climate, if we're looking and hungry for some buys, we're going to hit strong buy, and we're going to go to our mega and large caps again. Now, if we want to be, I guess, a little bit more specific, right? And knowing that, okay, well, in the next couple of months, there could be maybe some volatility based on inflation remaining elevated, potentially. Interest rates are higher for a prolonged period of time. Businesses may feel that pressure. Consumers may feel that pressure again. However, in thinking, right, again, about the future, what is to come, we know when interest rates come down, what's more likely to happen is that the bulls will really likely come out to play. We can toggle with our sectors. So if we're, again, that risk adverse investor right now, just given maybe we know our risk tolerance isn't so great, right? And when the market dips, we really panic. We don't want to be in that position to sell. We want to go with those safer stocks. Maybe we will just focus on healthcare, consumer defensive, or maybe even utilities here. We have our list. So again, we have what looks like right here now in front of us. We got Cooper that's showing up again. It's the healthcare gem. We got Eli Lilly that's in there as well, and Merck. So these are all interesting ones. But let's take a look here at Dexcom. Well, we're going to give that one the same go around here. Okay. So again, coming at Dexcom, like we have not a clue what this company is all about. We're going to go to stock analysis, scroll down, just get this company description real quick and see, okay, we got another medical device company. Now, this is me, right? Not knowing what would appear or the stocks that are going to come up. Dexcom, to be honest with all of you, I haven't really heard of Dexcom. So year to date, we're up over 10%. Now, if we go to 3 years, let's see how it's been performing during all of the volatility that we've been experiencing. Well, up last year, over the last 3 years, up 48+% there, appreciated. Now, if we fly over to 10 years out, now 1,431%. I mean, to me, if I look at, right, Apple's over 1,000% appreciation. So my bell goes off of what does this company do? What are they manufacturing as of late, right? I also now like to see this TipRanks smart score of a 10. That's great, right? Because now I know that this one, based on the 8 factors, which those 8 factors, by the way, come down to what insiders are doing, hedge fund activity, all the analyst ratings, economic inputs, right? If I put all this together, according to our TipRanks scoring system, we got a 10 on our hands. Okay, not a end all be all hit the buy trigger, but certainly one that I like to have on my stock watch list and a potential buy if it's suitable for my portfolio. So we got another medical device company. You want to always check if there's any recent news, right? So Dexcom news. Now, we have Dexcom actually then just came out on our TipRanks Perfect 10 list as of our article that went out 16 days ago. So not too shabby there. Want to always look around for if they had anything that just happened, right? What's happening in the industry? Want to go over to ownership. Okay, no recent insider activity. Let's take a look. Okay, now we have, at least last quarter, an interesting development. 2.2 million shares purchased by smart money last quarter. The hedge funds were in on this one. Okay, which is always interesting to note because you want to look at this one now as smart money would look at it. Does smart money, do the hedge funds buy a stock this week and sell next week? Well, not typically, not as I've seen them, right? So what they usually do is they think longer term. It almost reminds me of a Medtronic situation. If you're familiar with Medtronic, another medical device company, right? Hedge funds have been all over that one. So very interesting play here, but let's now go back to where we all started here with the analysts. Very exciting. If we hit top analysts here, we get a consensus rating there of $152 per share. That would be up 11% worth of upside from where we are today, coming in at a strong buy. Again, I love the analyst and I love seeing the excitement here on this page. But to be honest with everybody, I always scroll down and I want to take a look at the best analysts. Who's doing the ratings on this stock? Okay, so we had Joanne, the same analyst, right, recently rated this stock. But we know, if my numbers are correct there, and if not, I apologize. I think her success rating overall was 63%. And we know that Cooper Co. was actually one of her top stocks to rate. Well, is Dexcom? We can scroll down and take a look. We got Steven on 1 month. We got Matthew on 3 months. And then we got Matthew Blackman coming in at 1 year and 2 years. So here come the questions. What type of investor are we? Are we the day trader? Are we the buy and hold for 3 months? Are we the buy and hold investor for 1 year, 2 years plus? What analyst are we going to go with? For me, I know myself well. I am a long-term investor with that long-term timeline, meaning 5 to 10 plus years, maybe a buy, hold, and never sell type of guy. So I'm going to look at Matthew here on my right-hand side, 1 year out and 2 years out, particularly the 2 years. And I want to go click over to Matthew Blackman. Okay, important. Again, because Matthew Blackman has an overall success rating of 47%. Right off the bat, for people who are just looking at Matthew's overall success rating, probably wouldn't listen to the guy. However, we see he averages here 15.2% worth of returns. That's pretty good. Now, most importantly is to understand the ratings on the stock that you are actually looking at. So let's find where Dexcom is at. Okay, here we are. We're going to hit that drop down. Now, Matthew is right, 17 out of the 19 ratings that he's had there on Dexcom. Okay, and average return of 40+%. Again, in the timeline in which we are investing with Matthew. So that 1 year out, 2 year period. Now, what I like about Matthew here is you could see that, again, because we're running on that 2 year period, whether or not it's up here, looks like it was back in April 28th there, 2023, or he rates a buy here and this stock goes down, which it did, and he rates it again, a buy on October 10th. We know Matthew's our long-term analyst. So the 2 year period, you can't shake and get nervous with Matthew if you're investing with him on putting your belief into Matthew for a 2 year plus time window. So keep all of that in mind. But on average there, again, that's pretty good odds. Success ratings there, 17 out of 19 ratings successful and 40% plus their returns. So this is all found, our stock ideas, through ideas, top analyst stocks. Again, you're getting all the latest ratings coming in with strong buys, or on the opposite end there, strong sells. Now, just if I wanted to go in that direction of a strong sell, okay, we could see what's happening. As of recent, it looks like by our data, we don't have any strong sells coming up. Take it for what it is. I will say a lot of analysts don't really rate a lot of stocks as sell. There is a particular, positivity there for them in their future if they continue to either rate holds or buys. So I always keep that in mind. And as I am to do here at TipRanks, is level the playing field for all of you. So I want to share this and pop back on the screen with everybody. Analyst ratings are great. I love them. I love analyst ratings. I use them actually at the very end of all of my due diligence, almost like sprinkles on the cake. And I use the analyst ratings as sprinkles on the cake because I'm going to be brutally honest with everybody. These analysts spend hours and hours and hours pouring a lot of due diligence into these stocks. Now, if we don't have any time to do all the due diligence that they can do, which I'd assume we all don't, again, sprinkles on the top of the cake. But if you're an investor, which I hope we all are, and not just, right, a gambler, as I always like to say, we want to do our own due diligence first and foremost. Once we do that due diligence, we do the next right thing, which is to kind of dot our I's and cross our T's, right, and make sure that the analysts are agreeing with what we're saying. As an investor, what I like to say is I want to become the CEO of the companies that I'm investing into. So I do all my due diligence first. I look at my economic updates, my macros, and I take that whole picture together and I say, well, if I'm running this company, what would I foresee in its future, right? Then I sprinkle in the analysts on top. Folks, with that, I want to say happy investing to all of you this week. hopefully it gets us into some greener days to come. I am personally looking forward to more red days, just for more buying opportunities for myself. But we have all the tools on TipRanks to make sure that no one's getting nervous, no one's getting that investment anxiety, because we have those tools to make sure that we're even keel while executing our buys and sells and everything in between. Again, I wish you a lot of luck out there investing this week, and I look forward to seeing everybody next week. If not myself, Julie will be on here, but happy investing, and we'll see you then.